we have made some dramatic changes to the portfolio, so let's go ahead and show what that is. As you can tell from the title of the video, we sold out of Chewy, but it is not just Chewy stock that we sold out of. We did this. And there you go. Here is the new portfolio weighting. As you can tell, iRobot and Chewy are gone. We now just have Amazon and Salesforce as the two holdings. Things have dramatically scaled down. I wanted to do this for a couple reasons, which is what I'm going to outline in this video. If you've been following me, you know that I have a growth portfolio and a dividend portfolio. And with the growth portfolio, this is what it used to look like. It went from this, with these four holdings, to this, to now just these two holdings. So this is a big change for me, and now this is updated in the description. So if you want to check that out, that's down below. The new updated link is now down below. So if you want to click that and view this yourself, as well as the dividend growth portfolio, obviously that's down there as well. But in this video, I want to talk about why I sold it, why I'm just now down to two holdings in the growth portfolio, what I think this is going to do for us moving forward. And we're also going to talk about the business of Chewy as well, because we're going to talk about a lot of different things in terms of the revenue growth, the profitability, what the business itself is planning on doing moving forward into 2022, 2023, and beyond. So thank you guys so much for tuning in. If you haven't checked it out already, M1 Finance is having a referral promotion, of course, getting $10 for getting signed up with that. 124 people have signed up so far, so if you could do that, that would be great. As well as other things in my description as well are included, like credit card referrals for up to $100 for doing that. Not to mention there are also mentoring session opportunities if you want to reach out to me about that. This is also down below, so check out all that stuff down below. But other than that, guys, let's go ahead and jump straight into the video for Chewy stock. Now, if you see here down below, like I said, we did reduce this from 4 down to 2 positions. So we really scaled down the growth portfolio to just 2 stocks. And I'm very bullish on the 2 that I have left, Amazon and Salesforce. And these are ones that I tend on being long-term holds. Now, what is the reason why I sold Chewy? Well, it's a couple of reasons. If you look at the revenue growth of Chewy, it has been solid, been growing quarter after quarter, record revenue after record revenue. Just so far in the last year or so, since the beginning of 2021, it's went from $2.04 billion, $2.14 billion, 2.16, 2.21, 2.39, and then the most recent reporting was 2.43, and they should be giving us an update on revenue in the next month or so when they report their earnings. Now, profitability. It has been a long-term trend upwards. If we go ahead and put to the annual charts here and take a look at that for the long term, you can see that this has been an unprofitable company. But ever since they really started beefing up their revenue and their profitability up in 2018, they've been reducing their margins, their negative margins, I should say, to getting closer and closer to profitability. They were initially losing $338 million in 2018, then down to negative 267, negative 252, a big jump down to negative 92, negative 73, and now they're looking at potentially putting up a profit in 2022. I think it's going to be really close one way or the other. Last quarter, the first quarter of 2022, they did put up a small profit of $18 million, which was a dramatic improvement from the last 3 quarters. And this is what I wanted to talk about, the profitability. What I believed is that this company would expand margins massively over the coming quarters. Now, this company has barely done that. Their most recent quarter, they were able to finally revive it a little bit into the positive, but for several quarters now, it's been down and down and down. And I really question profitability in the short term. Now, another thing I want to talk about is the stock price. Now, if you didn't know, Chewy was hit dramatically in stock price. From its all-time high at about $120, just the other day, this company hit $22 a share. It had a horrible year in 2022. Even after all these massive moves up, it's still down negative 19%. So considering the fact that it was at a low of 22 just the other day, today it sits at 46 and change, 46.95. So that is a double up, over a double up from its bottom at $22 and change. Now that doesn't tell you anything about the company itself, but I think what is also worth mentioning, as I always show in my videos, I show my performance. This is my year-to-date performance compared to the other stock market indexes like the Russell, the NASDAQ, the Dow Jones, the S&P 500. And as of August 1st, as of the beginning of the month, I was negative 21%. We did have some big returns at the beginning of the month with iRobot being bought out, so we're probably pretty close to these indexes, if not beating them now, but that'll be updated at the end of the month. Now, one thing that I've had a lot of in the last year, which I do not like, and for a long-term basis, is margin. I've had a lot of margin, and Chewy eliminated a lot of that margin for me. If you didn't know, I had 300 shares of Chewy, so selling it in the 40s freed up about $14,000 worth of capital. And that was all paid down to margin because I had a lot of debt in my brokerage account. So the way I look at it is this. is that Chewy is a good company. They are growing their revenue. They are hopefully going to get to profitability. And one of the key drivers I think is going to be big for profitability is going to come within the next year. This is highlighted from their earnings call transcript back, let's see, about 6-9 months ago, just a couple quarters ago. And I wanted to highlight this paragraph because I wrote this down in my notes to come back to. It said the second launch in 2023 will be sponsored ads on Chewy.com, which will enable our suppliers to seamlessly advertise to our 21 million active customers across our platforms. We have been building bespoke advertisements for years, and Chewy sponsored ads will allow us to scale these efforts into contextual advertisements that will deliver both highly relevant products to customers and high margin revenue to our business. Suppliers are asking us for ways to advertise in a durable, privacy-safe environment across Chewy.com, one of the largest pet e-commerce search engines in the US. In closing, let me just share what I would characterize as the mindset of every single Chewtopian who is committed to achieving our mission of being the most trusted and convenient destination for pet parents and partners everywhere. Now, I've mentioned many times, this brings me back to my number one investment. And a couple videos ago, you see my recent search here, I gave the example of searching something on Amazon like men's t-shirts. If I go in here, I search men's t-shirts, you're going to see a couple things. The first thing you're going to see is sponsored items. Right here, Bamboo Cool, sponsored. You have Climic, sponsored. You have Into the AM, sponsored. And then you also have feature from our brand. You have an Amazon Prime brand right there, right on the first line, the first thing that you see. And so in the same way that I searched this, Amazon just got paid by these three companies to put up these advertisements. Now, what if you went on Chewy and you search something like dog food? You're going to see very similar advertisements when you search something like that. When you search dog food and Amazon just put up this sponsored, this sponsored, this sponsored ad, Chewy is going to have an identical type of thing. So that leads to massive profits. That is pretty much all profitability. That is hardly any cost to run those whatsoever. And so I think that does give Chewy a lot of opportunity to grow the revenue and, more importantly, the profitability over the next 1, 2, 3 years. Now, the thing is, like I said, I want to get rid of margin. It's had a big run up. I may be willing to buy it again in the future. But the thing is, when you look at the stock market, for example, let's look at the NASDAQ, the QQQ, for example, okay? When you look at that and you consider how much the NASDAQ has went up over the last couple of months, especially over the last few weeks, you see over the last month, it's currently up 8.59%. Even over the last 3 months, it's about up 8%, dramatically higher than where it was from its bottom just the other day. So looking at the year chart, it has been ugly, but we're starting to see a recovery. And the way I look at it is this is a defensive move. If this stock market tends to go down and it goes down all the way back to new fresh lows, a company like Chewy is going to hit dramatically hard. This company is not going to go down from $47, $46 down to $40. It's likely going to go to $30 or even $20 like it was just the other day. I really hope not, but who knows? Maybe it could even go below $20. So the thing is, if this company hits a big downturn again, if it goes back down to $30, $25, $20 a share, I'd consider buying my shares back. But right now, I'd rather get rid of margin, be safer in my portfolio, and be defensive in a time when there is a recession and lots of uncertainty in the market. But other than that, guys, that's why I made this video. That's why I sold out of Chewy. Check out stuff down below if you haven't already, including sign up for M1 Finance, credit card referrals, mentoring sessions, and all that good stuff down below. But thank you guys so much for watching, and I'll catch you guys next time.